Hi everyone, welcome back to Saheb Academy. Today in this video we are going to talk about Conservatism Principle of Accounting, which is really simple and straightforward, and it is also known as the principle of prudence, or you can say Prudence Concept, Conservatism Concept. It's the same thing, don't worry about it. Okay, now the main question is, how does this principle help us in doing the accounting of the business? Yeah, let's understand that. See here, Conservatism Principle states that the accountant should not anticipate any future income. However, they should provide for all possible losses. Yes, that is what this principle exactly tells us to do. See, as an accountant, what you have to do is you have to recognize the bad news first, and for the good news you have to wait till it actually comes true. Yeah, this is what you have to do. This is the basic essence of this principle. Okay, see here, they should provide for all possible losses. Recognize the bad news first. Whatever bad that is going to happen in future, yeah, you're expecting, it's not that 100% sure, you're expecting it may or may not happen. Yeah, if any such bad thing is there that may or may not happen in future, then you have to do something about it right now in the financial statement. Yeah, that's what you have to do. Either you have to recognize it, that bad thing, or you have to disclose it, so that the users of financial statement can come to know about it. Okay, such and such situation may happen in future, yeah, which will cause losses. So they will be prepared for it. They will be able to take decision regarding it in the future if it does happen. Okay, they will be prepared in advance if we disclose it or recognize it in the beginning only. Yeah, that's the thing. We are being conservative over here. We are following conservative approach. And then it doesn't stop over here. One more side is there to this principle, that is, should not anticipate any future income. Regarding the good news, what did I say? You have to wait till the good news actually comes true. That means if you're expecting, let's just say you're expecting any good things to happen in future, then you should not recognize that right now in the financial statement. Let's just say, for example, you're expecting that you will have a big customer, big client in future, and you will have such and such revenue. Then those future revenue or gains, you cannot recognize that right now or disclose that right now in the financial statement. If you do that, then what will happen? The investors and all these people, the stakeholder, the users of financial statement, they will be misled. Yeah, let's just say, for example, later when the future comes, we do not get that client, we lose that client or something, then what will happen? It will be misleading for the users of financial statement, isn't it? Maybe they invested just because of that and all. Yeah, so that is why we have to be conservative. Recognize the bad news first, and for the good news we have to wait till it actually comes true, till you actually realize it. Once you realize it, then only recognize it in the financial statement. Is that clear? Or you are 100% sure of it? See here, basically expenses and liabilities should be recognized as soon as possible. Yeah, in case of uncertainty, if you're uncertain about any expense or liability, yeah, and you are expecting that it may happen, that liability, yeah, it may arise, then you have to do something about it right now in the financial statement. If any liability is there, it may arise in future. Yeah, it's not there right now, you're expecting a certain liability will arise in future, then you have to disclose it as a contingent liability, okay, in the notes to financial statement. Fine. Then see here about the possible outcome, but record the assets and revenues. These are good things, assets and revenues, only when they are assured to be received. Only when you're 100% sure, or you are you actually realize it. Is that clear? And believe me, you also apply this conservatism principle in your real life also. Do you know that? See, for example, let's just say you had an exam today, okay, and let's say you are an average student, and your paper was really good. You are expecting to get 95 out of 100. Yeah, luckily. So now when you will come out of the exam hall and when you will meet with your friends, what will you say? Will you say that you are going to get 95 out of 100? Of course not. You will not say that. Yeah, what will you say? You will say, I'm just gonna pass, maybe I will get 50 or 60 out of 100, luckily. Yeah, you will say it like that. Yeah, because you don't want to sound overconfident, and you are not confident also, because luckily you have got a good paper today. So that is why you will wait till the results come out, and then only you will celebrate and let everyone know, isn't it? Yes, you are being conservative. Yeah, you are applying conservatism principle already in your real life. Yeah, that's how That's the meaning of conservatism principle. Now let's just discuss more about this. See here, what does it actually means to apply conservatism principle? It means to stay on the safe side. Yeah, you're already expecting worse things to happen. See here, a company should factor in, consider the potential worst case scenario. What's worse that could happen when making the financial forecast under the guidelines of this principle? If you have this idea in your mind, right, what's the worst that could happen, then you prepare yourself for that, to tackle it in future. See, for example, if there are two options to choose from, you're doing some financial forecasting, and let's just say you have two options, whatever it is, okay, the accountant should choose the one with the lower number, the one with the inferior numbers, the worst numbers, to stay on the safe side, so that our plan can be according to it. If we are planning like this, then what do you say, lower your expectations, right? That's the same case over here. We are lowering our expectations over here, so that if something actually happens, something bad actually happens, then we are prepared for it. Okay, fine. Approaching your financial statement using conservatism accounting ensures that they are prepared with caution. Yes, that's what I said. The aim of this principle is to protect the investors from potentially overstated assets and revenues, and also understatement of liabilities and expenses. This is a very bad position for a company to be in. Overstated assets and revenues and understated liabilities and expenses. It's like window dressing. You are showing that your company has more assets and revenues and lower expenses. That means you're showing more profit. So that's window dressing. Okay, you're manipulating the financial statement. So the idea behind this principle is to protect the investors regarding that. See here, protect investors from potentially overstated assets and revenues, and also understatement of liabilities and expenses. Is that clear? Now let's take some real examples of this conservatism principle. See here, inventory valuation. We apply this principle in inventory valuation. Do you know inventory is valued at lower of cost and net realizable value? You can say market value. It's not market value actually, it's the the sales value minus the selling cost. Okay, but you just think right now, if you don't know about this, then it's just market value. Okay, cost and net realizable value. Now see here, see this example. Suppose we bought inventory for 1,200 rupees. Okay, but now we can buy for 500. So this is the cost and this is the net realizable value. Okay, this is the cost, this is the net realizable value. Then what we do, we follow accounting standard 2 for inventory valuation, which says that we have to value the inventory at the lower of cost and NRV. So what we will do in our accounting book is we will decrease the value of the inventory. See here, then we must immediately write down the value of asset, the inventory, to 500. Why are we doing this? Because we are being conservative. We are recognizing the bad news first. In the market, the price has come down, so we also may not be able to sell it as at 1,200. So this will be a loss for us. How much? 700 will be a loss for us, isn't it? We are taking it down, lower of cost and NRV. Is that clear? Right. Now see another scenario in this only. But if inventory was bought for 1,200, the cost is same, and now we can buy for 1,500. The market value has increased. In the market, if you want to buy now, then it's 1,500. If we want to sell it, then we will be able to sell it at 1,500. But still in the books of account, what we do, see here, it must still be shown as 1,200 on the books only. Lower of cost and NRV. We will show the inventory at 1,200 only. We will not increase it to 1,500. No. When we will sell it, then only that gain will be recorded, that profit of 300. Okay. The gain is only recorded when the inventory or the asset, inventory only, is sold. Fine. This is the thing. Here what is happening? Here conservative accounting is being done. Conservatism. See here, lower of cost and NRV. Fine. Let's take another example. See here, the lawsuit example. Assume your company is in the middle of a patent lawsuit. Okay, someone has filed a case on you and you are expecting to win a large settlement. You are expecting to win. If you are expecting to win, then what do? If you are expecting something good to happen, we will get money, then we are not going to do anything about it. We are not going to recognize it. Should not anticipate any future income. Recognize the bad news first, but regarding the good news, you have to wait till it actually comes true. It did say that, isn't it? Yes. So say here, now you should not record any, you should not record the gain on financial statements because it is not certain. Yeah, you're not 100% sure that you are going to win. No, you have just consulted your lawyers and they are giving their opinion. Yeah, you may win or you may not win the amount you are expecting. So it is misleading to the users of financial statements. Fine. If you recognize it, then it will be misleading. Now, what if the lawyers tells us that we may lose the case, we may lose the suit? Yeah. So then what we have to do? It's the bad news. We have to do something about the bad news right now in the financial statement, isn't it? You should record the loss in the footnotes of its financial statement as a contingent liability. Okay, this would be the most conservative approach because financial statement users want to know if the company will have to pay out a large sum of money in the near future. Yeah, if you disclose this contingent liability, that we may lose such and such amount in future, then the users of financial statement will come to know, okay, there can be problem of cash flow. Yeah, so this is how you do it, right? It's a company. It's not like your own single owner business that you can hide everything from everyone. No, this is company. So many people are involved over here, investors, everyone. So you have to follow certain principles. You have to follow the law and all, right? And you have a big responsibility over here. So that is why you have to be transparent. So that's the thing over here, conservative approach, because financial statement users want to know if the company will have to pay out a large sum of money in the future. Is that clear? So this is how the conservatism principle is applied in the business. Yeah. Is it clear? It's really simple. The basic essence is what? Recognize the bad news first, and regarding the good news, you have to wait till it actually comes true. Okay. So that's it for this video. See you in the next video. Bye.